Welcome to this explainer. Today, we're unpacking the biggest financial leak in history. We're looking closely at a moment that completely shattered the illusions of global finance and unmasked exactly how the world's most elite individuals manage their wealth. Now, this isn't a plot from some spy thriller, right? It's a very real, incredibly complex financial event that literally reshaped regulations across the globe. Imagine waking up to find 11.5 million confidential documents suddenly leaked to the public. Just wrap your head around that number for a second. 11.5 million. We aren't just talking about a single folder left on a train, or a whistleblower handing over a dozen pages in some dark parking garage. No, this was a staggering 2.6 terabytes of data. To put that into perspective, that dwarfs previous historic leaks like WikiLeaks or Snowden combined. It was an absolutely unprecedented data dump that set off a massive global shockwave, exposing financial secrets that had been meticulously hidden for decades.
And the contents of these documents didn't just point to everyday individuals. These files expose the hidden wealth and secret bank accounts of the absolute highest tiers of the global elite. We're talking prominent politicians, beloved celebrities, powerful business tycoons, world leaders, and even famous athletes. The files implicated figures like the Prime Minister of Iceland, who actually resigned later on, and uncovered a massive network tied to Vladimir Putin's close associates. The documents revealed billions, literally billions of dollars, being moved quietly across the globe, entirely out of the public eye.
Section 1. Inside Mossack Fonseca.
So to truly understand how this massive system operated, we've got to look at the entity right at the very center of this whole scandal. For decades, a Panamanian law firm called Mossack Fonseca operated completely in the background. They quietly served clients from all around the world by specializing in one very specific, highly lucrative service, the creation of offshore companies. They spent years, decades even, helping clients set up intricate financial structures, effectively building a shadow economy. But what exactly were they building?
Well, the crucial point here is understanding the concept of a shell company. This was the primary tool utilized in these leaked documents. A shell company is essentially an offshore entity or a financial structure that, for all intents and purposes, exists entirely on paper. It's a legal construct, just a name on a registry, but practically nothing more.
And this brilliantly illustrates how these entities functioned, actually didn't function, in the traditional business sense. These companies usually had absolutely no employees, zero. They had no physical office spaces you could walk into, and they conducted no actual business operations. They weren't manufacturing goods or providing services. Think of a shell company kind of like a Hollywood movie set storefront. There's a painted sign, there's a front door, but there's absolutely nothing behind it. They existed merely as legal placeholders to hold assets or just route money around.
Now, it's really important we clarify the dual nature of offshore companies. Owning an offshore company isn't inherently illegal. In fact, lots of individuals and businesses use these structures for completely legitimate purposes. Things like managing international investments, estate planning, protecting assets, or just simply maintaining legal privacy. But, and here's the catch, the leak raised some serious questions about how these exact same structures were allegedly abused. The documents pointed to individuals allegedly using these shell companies to hide the true ownership of assets, illegally evade taxes, secretly move money, or conceal some glaring conflicts of interest. That dual nature, that super fine line between legal privacy and alleged financial abuse is exactly what made this leak so explosive.
Section 2. The Global Investigation.
Because, let's be real, a leak of 11.5 million documents doesn't just analyze itself. We have to look at how this incredible endeavor actually unfolded. It all started back in 2015, when an anonymous source contacted the German newspaper Süddeutsche Zeitung with just an enormous collection of files. The journalists quickly realized the sheer scale of the leak was way too big for one newspaper to handle alone. So, what did they do? They shared the data with the International Consortium of Investigative Journalists. And what followed is honestly astounding. For nearly a year, hundreds of fiercely rival journalists from dozens of different countries worked together in absolute secrecy. They somehow managed to keep the biggest story of the decade completely under wraps while meticulously combing through all that data. Then, on April 3, 2016, they hit publish, and the story exploded simultaneously across the globe.
Section 3. The Dramatic Fallout. Once the story broke in April 2016, the repercussions were immediate and they completely shattered the financial status quo. Governments all around the world opened official inquiries. Public officials who were implicated found themselves stepping down. And get this, thanks to this leak, authorities globally have been able to recoup over $1.36 billion in unpaid taxes and penalties. That's a massive recovery. Furthermore, banks were forced to rapidly strengthen their compliance procedures, and entire countries introduced much stricter rules regarding financial transparency. Above all, this massive event ignited a worldwide debate about tax fairness, leaving millions of us asking one very pointed question. Why do ordinary citizens pay taxes while complex legal structures allow others to seamlessly move money across borders?
So what actually happened to the architects of this system? Well, the very firm that had quietly orchestrated these structures for decades, Mossack Fonseca, found its reputation irreparably damaged. As the scrutiny intensified, clients fled the firm, and crippling legal challenges mounted. Operations rapidly declined, and within just a few years of the massive leak, this decades-old powerhouse completely collapsed and closed its doors forever.
Section 4. A new era of transparency.
The aftermath of the Panama Papers didn't just end with a single law firm closing. This event fundamentally changed how we view global finance and accountability. The core lessons here are super clear. Transparency isn't just a buzzword, it's absolutely vital for market integrity. We saw firsthand how the by-design complexity of these financial systems requires immense cross-border teamwork to unravel. And perhaps most crucially for the future, this proved that technology is making it increasingly difficult to hide large-scale financial secrets forever. Digital footprints are massive and they are incredibly hard to erase. And finally, as Mossack Fonseca learned the hard way, trust is the ultimate currency. Once it's lost, recovery is virtually impossible.
The Panama Papers permanently changed the global conversation around wealth, taxes, and accountability. It absolutely proved the undeniable power of investigative journalism. But as we look at the financial regulations shaping our world over a decade later, it leaves us with one really provocative thought to end on. Considering how much wealth is built out in the open, what other immense financial secrets are currently operating right under our noses, just hidden in plain sight?